Good afternoon, it's Clayton Ream with Van Ahn Company with your afternoon grain and livestock closing commentary for the week of February 19th. Well, kind of an uneventful day. Option expiration for March contracts was this afternoon, and it left corn kind of stuck in a middle range here where we settled right above 365. A lot of open interest potentially at that 370 line, so we'll get that adjustment here this afternoon or to start next week to see really kind of how the funds are positioned. There's been a record net short, basically not quite a record, but a very heavy net short position across grains from the managed money crowd. So we'll see if that load gets lightened a little bit. We're really stuck in a really tight trading range in these grain markets, and we're just kind of waiting for a catalyst to take us one way or the other. When you look technically at specifically the corn market, you do have a potential triangle formation in the weekly or monthly chart that leads us to a potential 60-cent move once we break outside those ranges. Those numbers align right around 375 to the upside and 350 on the downside, and then the additional move if we get those closes outside those ranges. Over in the wheat and bean markets, not quite the formations that we have in the corn market, but just kind of a subdued marketplace. We get reports now that Argentina is a little bit too wet. We got some flooding occurring in the fields, but with that information, even though it's a little positive and we have the backloads in the Brazilian ports, just wasn't able to give us the muster to get the markets up much higher. But we're sitting above, right at resistance around that 880 level. In the bean market, that is a potential price point to where if we can get above it on a weekly close, that will spark some additional buying interest. And then in the wheat market, we're working into a time frame here where we got crop coming out of dormancy, and the weather is going to start to shift. We got reports here this afternoon that the March is going to come in like a lion versus the lamb, so that's going to produce some extreme moisture along with some colder temps potentially moving forward. So that will be a kind of a key focus of the wheat market, but fundamentally with the large carryouts that we have, not really anything that's going to drive us a dollar one way or the other. So we'll just take the nickels and dimes on a daily basis that we can hopefully muster up here as we work forward. Also, to start next week, we're going to focus on the outlook form from USDA. That's going to have a lot of people tied up here Thursday and Friday. That's going to be an inside look at what USDA expects the USDA balance sheets to look like from here on out for about the next 10 years. So really the key focus is going to be what they feel acres is going to look like, and that's going to potentially follow through into that March 30th planting and crop production report at the end of March. So pay attention to those details, and then also you have the wayside report there at the beginning of March. That will be a market mover too. In the livestock markets, had a cattle on feed report this afternoon. Really nothing there. Everything right in line with estimates. On feed at 100%, marketing's at 98%, and placements right around 99%. So not really a market mover there. Cash trade was about 210 dress, which is about $4 better than last week, which is another supportive factor. But with the strong run up earlier this week, not much for the futures market to react off to close out today on Friday. The hog market, however, though, looks like it was going to potentially break out to the top side through recent highs on the chart, but reversed lower yesterday and then got beat up pretty hard today. Really the key focus in that market remains the weekly slaughter runs that are running a little bit higher than last week prior. So we're going to keep a close eye on that number. If we get those numbers to run consistently higher on a week-to-week basis, you're going to start to question that hog and pig report, and that could lead to additional weakness in the futures board. But once the cash market, if that remains firm, this could also be just a potential shift in the uptrend. So a couple different things to be focusing on that hog market to try to dictate where we're going to head as we move forward. Realistically, though, with these prices, it is probably a market that a guy should be getting after and protecting. Outside markets are fairly quiet, pretty much weaker across the board. The OPEC is working on a potential production freeze, so pay attention to that. But the crude market was lower again here today. Not really boding well, I guess, on the chart, so pay attention to those outside markets. And I guess that's it for the week. So as always, trading futures and options provides risk and loss. It's not suitable for all producers. Have a good weekend.